So if you've been watching the news at all, then you know that there's been changes in what's going on in the interest rates, and it's been all over Fox Business. The 10-year Treasury yield's been jumping up. Today is Friday, March 19th. I have Brian Farwell here. He is my trusted lender, and he is going to give us an update on what is going on in the world of interest rates and loans. So, Brian, what's going on?
Hey, Josh, thanks for having me on. Yeah, it's been a wild start to the new year in terms of interest rates, especially over the last 30 to 45 days. So want to give you guys some insight. Before we dig into a chart that I want to show you, the general reason why rates are rising is twofold. It has to do with the stimulus package that's been released. I know even just talking today to a couple of clients, they've already received those checks in their bank account. And the other thing is then what that, along with the other economic factors, will do in regards to inflation. So when inflation rises, it's a given that mortgage interest rates are going to rise. And there's a lot of projections out there that we will be seeing inflation rise over the coming weeks and months. And so because of that, the mortgage market, basically mortgage rate market, has begun to account for that. So Josh, if you can bring up this chart. Basically, what we're going to show you here is, this is from the start of the new year. This is tracking what we call mortgage-backed securities. So what happens here is this is an inverse chart. Okay, so when this chart goes down, interest rates go up. When this chart goes up, interest rates go down. So this is what we use to track everything. A couple other things. Each bar represents one day, and red obviously means during that day, the chart went down, which means rates rose, and green means rates improved. So Josh has his cursor hovered over kind of the top point in this chart. You can see that, and if you look, the date is January 26th. So this is when we were seeing rates, well below 3%, 2.75, something in that range for kind of a traditional conforming 30-year mortgage. And since then, we have just had a steady decline in this chart, which means interest rates have risen pretty dramatically. So if you go all the way to the far right, Josh, you'll see that is today. That red bar is today. And we have, what we're seeing here is if you go from basically February 1st through today, it's the equivalent of 300 basis points, meaning if you got a rate, let's say 2.75 on February 1st, today, that's going to cost you 3 points to get that. So it's a big change, or the equivalent would be about 3/4 of an interest rate. So 2.75 on February 1st is now about 3.5%. So you can see that really big change. And even furthermore, since March 1st, we've actually seen the market adjust by about 1.5 points. So that's been pretty dramatic just in the last 2 weeks for people that are currently kind of in escrow without a rate lock. So that's kind of what has got us to where we're at. Now, here's the thing I have to tell all my clients. We're still dealing with rates in the threes, 3.5, 3.3, 3.6, something like that. These are still rates that are historically low. But if someone comes in with the mindset of just the last 10 to 12 months, they feel like they're getting a really high rate. So it's really a part of, working with your lender and either looking if a refi makes sense or being an escrow on a purchase is recognizing not just in a small vacuum what rates look like in the last 12 months, but historically, where are they at and where are they going? It brings me to the crystal ball. I always tell people if I had a crystal ball on where rates would go, I'd probably take my crystal ball and go get in a different market where I can make more money or go to Vegas or something. But I do rely on people that are much smarter than me to kind of give insight. And so one of those main people is a guy named Barry Habib. He's one of the most respected voices in the mortgage world in terms of the market, both where it's come from and where it's going. And he's made a lot of very, very accurate predictions. And so every day kind of get an update from him. And just over the last few days, there is projections that in the coming months, we're going to be testing the high 3% range. As inflation continues to increase, rates will as well. And it's not going to be surprising to see kind of your standard 30-year rate in the 3.75 to 3.875 range. So that is something where, a client today may be looking at 3.5 and they get a little skittish because they would love that to be down closer to 3%. But you have to look at where we're headed to make the best decision on kind of what to do with the current market and current rates. So we'll keep an eye out on that, of course, for our clients, and let Josh know so he can inform you guys as well on when there are big shifts. But we are seeing a trend definitely over the next at least 60 to 90 days of rates rising. Beyond that, it's really, really hard to tell. It depends on, I think, vaccine stuff and when that all ends. I know we're eyeing May or something like that for that to be available to everyone, and then kind of what the summer months bring to businesses opening back up and the economy kind of rebounding a bit. So that's where we're at with rates.
Cool. So I got one question, Brian.
Yeah.
In terms of buyers needing to qualify for these loans, can you tell us a little bit about what it takes and what are the standards right now in terms of, credit scores and what kind of documentation is involved in obtaining a loan right now?
Yeah, absolutely. I think for kind of the standard, I'm going to say W-2 borrower, not a lot's changed. We're still going to ask for W-2s, pay stubs, bank statements, things like that. Where we've seen the most change is with someone, a borrower that is self-employed. And we've seen that now for several months now, so that's not new. But there's just been so much, depending on the line of work someone's in for their business, there's been a ton of change, either good or bad, over the last year, whether they could be open or have to be remote or whatever that looks like. And so underwriters and lenders are really combing through not just your 2 years of tax returns, which has kind of been the default in the past, but we're actually looking at very current profit and loss statements and bank statements, upwards of 3 months of bank statements, so we can see continued money coming in or income coming in. And so that has been a challenge for a few self-employed borrowers because 2020 was rough and maybe they were closed for 6 months or whatever that may look like. And so we're kind of making sure we look at the most recent things. We're not using 2019 tax returns and 2018. We're really wanting to use 2019 and have them file 2020s so we can see what the last year looked like for them. That's probably the biggest change in terms of like qualifying documentation. FICO scores, we'd love to see clients above 700, but you can still get loans if you're in the mid 600s or whatever it is. Maybe even low 600s if you go FHA. So that still absolutely exists. You can still do the 3.5% down. You can do the 0% down VA. All of those things are still around.
That's awesome. That's awesome. Thank you, Brian. Well, that's great news, guys. So real quick, I'm going to do a little housing market update for you guys about what's going on in the Conejo Valley and Westlake Village. And here's my 7-day market watch. So here we got 5 coming soons, 52 new listings, price changes 29, back on the market 5, active under contract 62, pendings are at 36, closed 50, expireds 3, holds 8, and withdrawn 1. So the 2 numbers that we always track are the new listings where we've got 52 and the active under contracts at 62. So, just like last week, we are in a seller's market. Inventory is minimal. We would love to see more sellers because this number should be way higher right now. We're in the 3rd week of March. So, this is telling us that basically we don't really see or forecast anything, different or price drops coming soon because we're still selling way faster than properties are coming on the market. So that's what's up with that. So at any rate, I'll stop sharing my screen. Anyway, guys, you can contact me here, email me, text me, call me. I'm happy to share Brian Farwell's contact info with you. If you have any thoughts on buying or selling and buying and want to know what, prices, monthly payments are going to look like, interest rates are going to look like for you, I'm happy to put you in touch with Brian Farwell. He's an amazing lender. He just did my home loan that we closed last month. Okay. It did an amazing job for me. He's ultra responsive, which I love. He answers emails, phone calls, texts real quick, like same way like when you guys contact me, I get back real quick. Brian's the same way. That's one of the reasons why I love working with him. But he's also extremely knowledgeable, and he gets the job done at the highest level of professionalism there is in lending. So anyway, guys, if you like the content that you see in this video, please like and subscribe to my channel. This is Living in Westlake Village. I'm Josh Brenner with Compass here in Westlake. This is Brian Farwell with Cross Country Mortgage here in Westlake Village. Thank you guys so much for tuning in, and we'll see you guys next time. Take care. Bye-bye.